What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall market and talk about a very interesting pattern that tends to happen during election years. But just note that I am not a financial planner, so make sure you take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on invested cash. This offer ends very soon, in just about 9 days from now, so check it out before they run out. Anyways, now let's talk about the market. So I just want to say that one of the things I mentioned in my previous videos is the fact that the market has a tendency of moving in these cycles, and they tend to dictate the algorithms that cause bullish and bearish moves. So I want to break down what the next cycles are essentially suggesting. So one thing that you guys know is that September tends to be a so-so month for the markets, and so far the September has been very strong. We'll have to see how the ending kind of continues. But when you look at these cycles, right? You'll notice that what tended to happen was, especially during these election years, in the May period, there tends to be a little bit of a dip. That's what this is essentially showing us. Similar to how around this like April to May period, we did get a little bit of a dip before a massive rally approaching July/August. This basically showed us that there was this big rally approaching July, and sometimes we oftentimes get these like little dips in the August period before another squeeze to these all-time highs. And then with a little dip in September, we continue to push to all-time highs, right? Just like how we got this little dip approaching September before we got to new all-time highs. And then what this is showing us is that what tends to happen is there's going to be a period of uncertainty approaching the election. This is what happens historically. So that October period, which is historically one of the weakest times of the year, one time that's known for there to be a lot of sell-offs, and because of other factors like that, there tends to be a little correction that comes followed by a big end of the year squeeze to new all-time highs in the end of the year for November and December. So I think that that's what seasonality is suggesting. I think we've been following this very, very closely. The thing that's a little off is that sometimes September starts off weak and then we finish September strong. But this year we started off September a little bit weak just in the very beginning before getting a very, very strong finish. And it looks like we may continue to finish very strongly. So with the Fed cuts in place, what I think is going to happen is I think this rally is not done yet. I think that there is still, a possibility of us going a little bit higher. So when we look at very, very key levels, I think that's what's going to be very key for SPY would be an attempt to get all the way up to that 575 target or maybe even higher than that. And I say that because, we had this low all the way down here during all of the uncertainty involving Japan and such. And then we made this little rebound recovery, got a little bit of a dip to establish a higher low, and then this was established with this continuation higher. So, what I think could happen is we may continue to push for that 575 target. We could dip a little bit and then see a lot of consolidation up here approaching the month of October. I wouldn't be surprised if once we get to October, we enter that corrective phase. I think that's what's going to most likely happen during this cyclical period. I wouldn't be surprised if we actually see a big dip approaching the election. We may even take out these lows. That wouldn't be a surprise to me. They may try to just trick a lot of people. I think we still have this gap to fill on SPY way down here in the 530s. So I think we're going to be coming down to fill that gap in October for this corrective phase. I'll show you the levels in just a second. Basically, do something like this, and then once the election comes, we start this recovery and we get a very strong end to the year back up to these all-time highs, right? So that's like in a nutshell what I'm trying to anticipate. But when you look at the levels, the key fib levels are going to give you guys a very, very good assessment of what to look out for. So if we start off with like the previous all-time high, we'll start off with this low first, and we'll go back up just like this. What you'll see is that the 0.618 retracement, okay, happens to align with where that gap is. But if the market goes a little higher, if we approach that 580 area, the 0.786 retracement, it's about 0.618 kind of aligns in between the golden pocket. The golden pocket is where this gap happens to be. So you could be looking for that as a potential target before the market makes a very, very nice looking recovery run. So that's my prediction. And I want to say this: regardless of who wins the election, I think the market's going to run. I think it's very manipulated, and they're going to squeeze the market really hard after the election. There might be uncertainty approaching the election. That's why we could get that corrective phase, but it's going to be completely fine. So I wouldn't worry too much. So that's my view of SPY. I think that for the time being, for the next couple of days, next weeks or so, this could hold up very nicely up here, continue to maintain the strength it has, and then we will see how well it holds up at these lows. I also want to mention that another way you could calculate the low is kind of like taking this. little trend line like this. If you draw it out like this, you guys can see that this aligns very nicely with where we might try to bounce, depending on the timing. So if we like bounce right here, this still aligns at the 530 area. So that could be another very interesting factor to consider. But that's what my view is. The market kind of pushes a bit into this consolidation phase. The next cycle, when we reach like very, very early October, I think that's when we're going to be entering a period of risk. So I'd be very, very careful. I think there's going to be another attempts to fill the gap below, and there might be a little bit of uncertainty approaching that election. And then once we hit November, the market should squeeze right back up, and we may continue to see this rally. Now, what about the recession? Shouldn't the recession take us to new lows? Isn't the market going to crash? The answer is, I think that they're trying. Excuse me, they're trying to delay the announcement of us being in a recession, or they are trying to manipulate data to kind of decrease the odds of that being said. And the reason for that is because the election's coming up. I think that's one of the big factors. Either that, or another factor could be the fact that we are not in the recession yet, and we're about to enter one. That's another factor. When the Fed starts cutting rates, right, it's not going to just, fix things immediately. It's going to take a while for the rates to really price into the economy. So what that means is we're still going to be looking for a period where unemployment goes up, and there's going to be a lot of economic hardships that continue. They may be looking for some bearish catalysts in October for the next corrective phase before we see a big squeeze for the end of the year. So I want to make that very, very clear. Um, Another thing that's worth noting is that the QQQ may do something very similar. When you look at the triple Q, I think that we could attempt to continue this rally. We have this big gap to fill up here, and we may continue this rally approaching the October period. I don't think we're done quite yet with the rally. I think there's more upside potential for the QQQ for now. But if we look at some key levels, like whether we get to this top or not, we'll have to see about that. But if you look at the way this was essentially moving, I'm going to start with this low actually and go back up to the top like this. What you'll see is that I think we could get very close to the high. I don't think the QQQ is done. I think tech is going to be looking for a little bit of a push, and this could be very fast. The market could be very violent, very fast. If we break this resistance at 485 going into next week, we also have Jerome Powell giving a speech next week. We could just go straight up to fill this gap, and that would take us very close to these highs into like early October before the next corrective phase. We may not break the lows. We still have this like gap to fill down here in the 470s. I'm not sure about any other gaps, but I do think that we could be coming down to the least, the point 0.5 to 0.382 retracement areas, like right over here, could easily be tested before it attempts to, rebound approaching the end of the election period, right? So how low we go depends on many different factors. You could even take like a trend line like this and kind of draw this out as one of our supports, but this depends on our EMAs and many other factors where we are at the time. I think we could be looking for a test of our 200 EMA, but this is going to be a lot higher by then. So, like I said before, there's all sorts of different ways you could kind of determine where we're going to go. We could go all the way back down to the 460s, if not the 450s, depending on how extreme this little corrective phase is. And if it is more extreme, the 0.618 retracement area could be a potential target for that, 454 targets during this corrective period. So we'll see if we end up getting some kind of correction like this. There could be a lot of uncertainty approaching the election, and a lot of catalysts could be used as the excuse to once again dump things back down. So just wanted to call that out. That's going to be very, very important. If we do get a rebound, we'll be looking for us to try to get back into the final cycle, taking us for a nice squeeze for the end of the year. But that's what I am still anticipating. So, in a nutshell, the market has more upside potential for the short term. But the October period, which is known for being risky during these elections, is going to add a lot of risk to the markets. And there's a good chance that they're going to use that as an excuse to dump things once again, not because they want the market to crash, but because they're getting ready for something else. They're going to dump things likely in October because they're getting ready for that big squeeze that's coming for November and December. That's most likely what's about to happen in the markets. So that's what I think is going to be the most important case. So, with that being said, I just want to say I appreciate you guys so much for listening. I hope you guys have a great rest of your day. I want to make this video very short, sweet, and simple. So take care, guys. I think that this is my general view of the markets. For now, we are bullish, but there could be a big change in the direction as we approach the October period. We're not there yet, so don't just start shorting blindly. You have to wait for confirmation, so give it the time it needs. I thank you for listening. Please have a great day, guys. I'll see you guys very soon in the next one, and peace out.